Should you trade or should you long term invest? This is a big dilemma that most people have when they come into the world of stocks. Because one guy on YouTube may say that you can become a millionaire in a month by trading, and another guy says that if you invest now, you'll have $10 million by the next year. So, what should you choose? Well, before revealing the big answer, let's discuss what these two things really are and if you can do both. Let's start with trading. So, trading in simple terms is buying things like stocks, currencies, or commodities to make a profit. Traders try to buy at a low price and sell at a higher price, or vice versa. It involves watching market prices and timing the best moments to trade. Now, there are lots of different types of trading, such as day trading, swing trading, scalping, position trading, algorithmic trading, copy trading, options trading, futures trading, forex trading, and crypto trading. So, a lot of different types of trading, but let's just focus on the big three: day trading, swing trading, and scalping. So, day trading is basically buying a stock or future contract and selling it on the same day. Swing trading is holding a stock for several days or weeks to catch price swings. And lastly, scalping is making a lot of small trades within a day to profit from price changes. Now, to figure out what type of trader you want to be, I recommend trying all of them on a paper trading account, which is basically trading with paper money, which you can do on tradingview.com. Spoiler alert, most traders prefer to be either day traders or swing traders because it requires less emotional stress. Let's say you choose day trading, then your potential profit depends on your risk tolerance and strategy. With future contracts, the reward can be high, but so is the risk. Theoretically, you can make significant profits, even 100x your initial investment, if you trade with a high risk reward ratio, meaning the potential gains are much higher than the losses you're willing to risk. However, this comes with the possibility of large losses as well, so you have to be smart with how you trade your capital. Now, I personally risk 1% of my account when trading and having a minimum risk reward ratio of 2, as then you are only required to have a win rate above 33% to become profitable, which can be possible if you just have the right strategy. And that is where day trading becomes difficult because finding that one edge in the market is rare. But to start off, there's two possible ways to find it: either make up your own or find something on the internet that works. So let's say that you decide to make your own strategy, which is a good idea, as the only downside is it can take a lot of time to study the markets. And I mean a lot of time. Now, the second way is by going on YouTube, and here you also have to spend a lot of time finding the right person to trust, which aren't trying to sell you his new shiny courses. So, whatever you choose, it is going to take time, and you just have to be patient. Personally, I chose the YouTube way and found a guy named ICT, which concepts does seem like working if implemented correctly. But you really just have to study them and make them your own, which there's a lot of people on YouTube simplifying them for you. For example, watch some of my old videos. But it isn't guaranteed to work, as it still comes down to you and your ability to trade and recognize market movements. Let's say you become a successful trader one way or another. Now, what kind of gains does the average successful trader earn monthly? Well, around 1 to 5%. And these are actually some big numbers if you think about it from a yearly perspective. As even if you get 1%, you still beat the SP 500's average annual return, which is actually really good. But one downside when it comes to trading is that you can have really big months, but also really big losing months consecutive. And of course, this does also count for long term investing, but it is way more significant when it comes to trading. Moving over to long term investing, the best way here is value investing, which basically is a strategy where you buy stocks that are undervalued, meaning their current price is lower than what they're truly worth. Investors focus then on companies with strong fundamentals like steady earnings, good management, and growth potential, expecting the market will eventually recognize their value and the stock price will rise. And value investing is also the go to for most big names, such as Warren Buffett, Charlie Munger, Mons Paprai, etc. So it is really one of the best ways to invest. Now that we know which kind of investor we want to be, what kind of results can we expect? Well, the average market return of the S&P 500, which is the 500 largest stocks in the United States, annual return is 9 to 10%. So that is what we could expect for the average investor, which is actually really good as it would double your money within 7.2 years. And if you wonder how I know this, check out this video right here where I explain everything you need to know about being a value investor. So let's say that you are a successful long term investor with annual returns of 12 to 15%. Then you would double your investment between 4.8 years and 6 years. So that is a really good return, as if you start with $10,000 and invest for 30 years, you would have between $300,000 and $660,000 with only a $10,000 investment, no extra money added. But how do you become a successful investor? Well, it's by following some basic principles which I have covered in depth in this video right here. But to make it simple, you want to look for a simple business you understand with high returns on invested capital above 10%, which basically means a company earns above 10% on every penny invested. Another thing you want to look for is a business which can use its cash to either make the business grow in the future or return value to shareholders by buying back shares, making the remaining shares more valuable, and lastly, having a low price to earnings ratio and price to free cash flow ratio, which again you can learn more about in the video I mentioned before. Now, when it comes to the time spent on long term investing, it can be very time consuming because you have to dig deep into the annual reports, finding out a bunch of important details and risks about the business you're thinking of investing into. But you can also invest into larger companies with market caps around 25 to 50 billion US dollars, which does have a lot of growth potential. Then you could still get these high returns of 12 to 15% without doing that much research. But the 15 plus percentage returns comes from digging deep into a company and having a good understanding of how the business operates, what makes its profits go up and down, why it has its margins, etc. To conclude, what is best, trading or investing? Well, first of all, you can actually just do both things, but it is very time consuming, as I've pretty much been saying this whole video, especially if you have a regular job. So that is probably not the solution for most of you guys. Now, if you have a job and is looking to make more money on the side while not spending a whole lot of time, then long term investing is probably the answer for you, as it does not require that much time and stress compared to trading. But if you can handle the extra work, trading could be your way to go. But for most people, I do really recommend investing. And in my opinion, long term investing is where you can get most for the time and money spent, because it is a very small percentage of people who can actually succeed in trading. So long term investing takes the win for most people. So that was the conclusion. Long term investing is the winner. Now, I would like to know if you guys enjoy this kind of video. If you do, please make a comment down below. Also, thank you so much for watching. But if you want to learn more about getting over 15% returns, potentially doubling your money in less than 4.8 years, then watch this video right here where I explain how I found a company that earned me 200% return within a year. And spoiler, it wasn't that difficult.